Hi, and welcome to our weekly look back at the major events and stories that have impacted the market so far in the last 7 days. Okay, we're going to start with a little bit of positivity over in the United States of America and the fact that it looks like the US may avoid a recession. Now, just before the weekend, reports from the US showed that there may be some light at the end of the tunnel for the US economy. Friday's figures showed CPI eased to 7.7% in October. Now, whilst obviously that's still a high number, it's a definite decrease compared to previous months. Unfortunately, the UK and Europe not faring quite so well. Approximately 10% for the UK and 10.7% for the EU at the time the US figures came out. Now, another thing to look at is the impact of productivity. In the US, they didn't see quite the same level of lockdowns as we did in the UK and the EU. In fact, states such as Florida and Texas, which are quite largely industrial based, were open pretty much all the time. So the impact on US productivity of COVID, of lockdowns, wasn't nearly as bad as what we saw in the UK and in Europe. In fact, Morgan Stanley analysts stated earlier this week that the UK and EU are to tip into recession next year, and in fact there's already talk the UK is currently in recession, whilst the US may avoid that recession due predominantly to the resilient job market. Now, Morgan Stanley also predict a sharp split between developed economies in 2023. We're not out of the water yet in terms of the US economy. However, compared to the EU and the UK, the latest figures seem to shine a positive light on them. Okay, now we're going to turn our focus to the currency markets and the fact that earlier this week, at the peak of the day on Tuesday, cable, the Great British Pound against the US dollar, reached 1.20. That's an increase of 15% from its September panic lows caused by the briefly Prime Minister Liz Truss and her initial economic statement. Now, whilst you think this is good news for the beleaguered British pound, we have an awful lot of information coming out over the latter part of this week that's going to have an effect on the value of the pound. Now, Wednesday we saw the new inflation figures come out. Now, unfortunately, those from the States last Friday, 7.7%, showing an easing, if you like, in this rapid increase. Not the case for the UK. In fact, October's figure came in at 11.2%, pretty much a record high. More on this in a moment. On top of that, we've also got a £55 billion budget black hole caused predominantly by COVID. And today, Thursday, the Chancellor of the Exchequer is unveiling his mini budget, or mini statement, which is going to be a driver too. Now, one thing we know for sure, because it's basically already been said, is that taxes will be going up. Everyone will pay a little bit more, he's quoted as saying. On top of this, are we looking at spending cuts? Will this be viewed as a positive for the UK economy and the Great British Pound? To be honest with you, I think there's a variety of scenarios possible, and particularly I think we're going to see bursts of volatility. Now, we aren't at the highs of 1.2 that we saw earlier in the week, currently around 1.17, 1.18. But it's a pretty choppy market. That volatility is there, so do remember your risk management techniques. Sticking with currencies, we've spoken about cable, Great British Pound against the US dollar, and now we're going to have a little look at how the euro's been faring this week. Earlier in the week, euro dollar rallied, and the euro formed a base and started a strong upward move above the 1.02 mark. Now, there was a key bullish trend line forming near 1.0290 on the hourly chart. And the past week certainly seen some support starting around the 99.50 mark. Earlier in week, in fact, FXOpen had a high form near 1.0479. At that point, then, the pair just eased off slightly, starting to consolidate some of those gains. We have seen a little bit of resistance starting around the 103.80 mark. If we get through that, then 104.80. Any gains over and above there may lead to 105.50. We're looking at support on the downside at 103.40 and then down to 103 the figure. What's happened since this sort of made this little rally earlier in the week? Well, at the current time, the pair's around the 103.2 mark. So we are looking at, will we see the support at 103.00 or are we going to see a further fall, I should say? Again, currency markets are expected to be pretty volatile in the coming days. Okay, we're going to finish this week with the hot topic. We have already touched on it in the first video in terms of the US, but we're going to look at the UK inflation figures. Now, as I mentioned earlier, inflation reached 11.1%. in the UK in October 2022. At the end of last week, we were talking about, is there going to be an easing in inflation? There was some positivity in the market. Now that's obviously not come to fruition. And in fact, 11.1% was higher than predicted. It's a bit of a slap in the face for the UK economy, certainly compared to the US, whose CPI figure fell to 7.7%, as we mentioned earlier. On the positive side, though, the comments from the Bank of England committee members may provide a little bit of support, may provide a little bit of help. As one was quoted saying they saw inflation falling early next year once the gas and energy issues that we're seeing over this winter subside. Whether that will happen, we don't know, but it is clear that a major driver of this economically high inflation that we're experiencing in the UK is down to energy prices and also basic prices of basic staples that everybody needs to survive. This will mean it's likely that the Bank of England interest rate policy of rises isn't going to change anytime soon, will remain. And in fact, there is again talk that perhaps we're going to see even higher levels than are expected. Top of this, we're seeing a house price decline outside of London, and early indications are the next set of figures will show it's happening in London as well. This is putting more and more pressure on all our households in the UK, but particularly on low-income ones. Again, we've had this mini budget statement from the Chancellor of the Exchequer, who needs to address this, who's looking to address this. We've got more tax to pay as well. A couple of bits have come out, a couple of headlines from the speech by the Chancellor, in that there is going to be more support for households. There's going to be a windfall tax on energy companies. It's going to be increased, and a new one for electricity generating companies. But will it be enough? Is it going to be enough to, if you like, pull the bootstraps of the UK economy up? We don't know. I mean, cable's off its recent highs, around the 117, 118 market at the moment. Again, plenty of volatility around. So I think overall, unfortunately, that inflation figure is more bad news for the UK economy. Wish you luck with your trading in the week ahead. Thanks for now.